Let's bring in Charlie Bobrinskoy. He's the vice chair of Ariel Investments. Charlie, it's great to see you again. Welcome.
Thank you. Welcome back, Kelly. Great to see you.
Thank you. And one of my most memorable things right before I went out was that you had said to everybody, be careful with Oracle here. Think twice before getting involved. And that was maybe, 30-40% from where we are now. So what do you do with the stock now?
Yeah, I think my exact words were trim, not just be careful, because this stock did go and I first talked about Oracle, it was at 118. It was trading at 18 times earnings. It was clearly not being considered a beneficiary of AI upside. It went all the way to 350.
Wow.
So it almost tripled, and it was trading at over 30 times earnings. And what value investors will say is there are good companies, but not so good stocks. And that's what this was. Oracle is still extremely well positioned. The stock just got way ahead of itself. And now it's come way back as there's a lot of concerns about the profitability of the industry. They're going to have incredible sales. The backlog is up fourfold. They're going to have a lot of sales. The question is, how much money are they going to make off those sales? And that's what people are concerned about.
Quickly, because Seema's standing by here with some more detail on this, Charlie. But so if we were just starting from today, forget your history. It's like, dating. Forget the history,
Yeah.
Just starting from today. What would you say about the stock right now? What are your concerns? What are the opportunities?
Yeah, I think that AI is real. Data centers are real. They're going to participate in a big way. They're very well positioned because this, as we talk about, AI is all about you're analyzing your own data, not about the world's data. And your own data sits on Oracle software. They are the leading company in data software for big companies. Those companies are going to want to use AI to create their own benefits from their own data. Oracle sits very well in that space.
But you worried about its debt load or no?
The debt load is going to get higher. What I'm worried about is that they're not being very forthcoming on the profitability of the contracts that they have. I don't know the margins. I do think everything right now points to double-digit earnings growth in 2026. So I think things are going to be okay. They're not going to get over their skis in terms of the debt. The CDS market doesn't agree with me on that and has started to treat this company like it was below investment grade. It's not. But we need a little more disclosure on the profitability. When we see that, I think things are going to be okay. Let's call this is a small position for me now, below average position, but I think it's still a well-positioned company.